please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Prakash and Mitesh with us for BTST calls. Mitesh, you go first. Thoughts first on this big move that we're seeing on the Bank Nifty on the expiry day and stock calls?
I think what the Bank Nifty has done is on the half-hourly chart it's given a reversal, sustaining about 25,900. Could see some more strength actually to about 26,200, 250. Earlier I was of the opinion of shorting around 26,000, but there is some good indicator set up on the half an hour chart. So maybe there is another 150, 200 points. If not today, possibly can play out till tomorrow afternoon. For the timing, I have one buy and one sell. Buy on KPIT with a stop at 261 for targets of 292. And Cummins India as a sell, keep a stop at 731, look for targets of 685.
Would you have people roll back their Tata Motors shorts, if any, Mitesh?
Sorry, can you repeat that?
Tata Motors shorts, should they be kept open for the day or should people take profit?
Let us trail the stop loss. I think very clearly, it's made a fresh low, and the earlier lows, if you recall, way back were in or around levels of 300 to about 297. So we are trading below that. That was way back in March of 16. So in case we remain below that, I think chances of further decline are there. So idea should be to trail your stop losses to about 298 levels and hold short positions.
Okay, Prakash, what are you trading?
I'll have one Mahindra & Mahindra. That looks good. We can see an up move here. Target on the upside is around 857. Stop below 837. Last moment I've also changed the stock. I think I like to go for Axis Bank. That looks like a buy, a good base formation here. Very easily we can see a target close to around 540 zones and maybe have a stop below 525. Axis looks like a buy here.
Okay, V-Mart's numbers, net profit of 15.9 crore versus 6.4 crore. Been a phenomenal stock, of course, this one. 4% higher right now, and to see that chart, 4.5% higher on V-Mart right now. Amrish, any thoughts on this stock? V-Mart?
No, V-Mart I don't really track closely, so it's difficult for me.
But still, revenue up about 18%. All parameters done well. Both profit of course is more than doubled.
Yeah.
But let's look at the EBITDA and then we'll get a better idea. Well, meanwhile, we've got another guest joining us actually. Ajay Bodki of Prabhudas Leeladhar is with us. Good afternoon, Ajay. Thank you very much for joining us. Well, first up, your thoughts on Nifty Bank. There are a bunch of banks that are doing very well today. Axis, ICICI, of course, HDFC Bank. It's just inched up to 0.9%, and that's enough to take the Nifty Bank flying 1% higher. Any of the private banks, even at these levels, you're a buyer?
Good afternoon, Lata. I think we are constructive on the retail-focused private banks. So I think the correction that one has seen in the market, in our opinion, allows a good opportunity for investors to buy into the names like HDFC Bank, IndusInd Bank and Kotak Bank. Yes Bank, again, which has been not so strong lately, is one bank again where we are very positive on. So I think these four banks are our preferred choices in the banking sector. In addition to two names in the NBFC sector, L&T Finance, which has posted stellar results and given very good guidance. In our view, 230 rupees is the medium-term target price for L&T Finance. And another stock which has been underperformer, which is over the last 3 months, is Capital First, which has seen highs of 850 levels and it's languishing at around, say, now sub 550 levels. Sure. The AUM growth has been very strong there, and I think investors should look at Capital First with a medium-term perspective. That can give good bounce back if the market stabilizes and moves up. Okay, 52-week low, of course, for Capital First. Ajay believes that's a good risk-reward. Ajay, I'll come back to you in a bit. Amrish, before we thank you, I just wanted your thoughts on these two biggies, Motherson Sumi and Bharat Forge, and the declines that they're seeing right now. You'll buy that?
Motherson Sumi, in fact, I'll wait for a while to pick up. But then Bharat Forge, I think, has come to decent levels where, I mean, from here, I think the downside could be limited. I mean, you could have a downside of another 30-40 rupees, but that's fine as far as Bharat Forge is concerned, because if you're talking of the next possibly 6 to 9 months, we could easily see a bounce back from here of what, at least 175-200 rupees. It should go back to where it was. All right.
Amrish, thanks a lot for joining in our studios. That's the view from Amrish Paliga. Ajay, Capital First is, of course, one stock that you mentioned. What about the other NBFCs, housing finance in particular? Most stocks now at 52-week lows. You reckon there's more to go considering the kind of rally that we had last year?
Yes, I think I would tend to agree there. most of the funds were grossly overweight on the housing finance names. And one of the reasons for the outperformance or underperformance also is the ownership and under ownership of a particular subsector or stocks. So that was one sector which which was overowned, and that's why the headwinds that all the NBFCs faced. I think these companies are the ones that got punished quite savagely.
Okay, well, let's just move a little bit beyond NBFCs and banking stocks. Ajay, we just saw the numbers coming in for V-Mart. The numbers for future retail and future consumer were not very good. I think it was not future retail and future consumer. Numbers were not very good in the fourth quarter, though the full year numbers did look reasonable. Are you a buyer in any of this V-Mart, any of the retail stocks?
Yeah, I think Future Group we are quite positive on, and we've been positive now for last 1 year on Future Consumer. Although the stock also has rallied quite significantly after our recommendation. Avenue Supermarket is another stock where the current weakness, I think if it continues, I think the stock can become a good buy. Though I must say that it must be looked at only with a medium-term perspective because the valuations are quite rich.
Okay, by the way, in between all of this, we forgot the 3 p.m. move on the Bank Nifty. It's taken place on the upside this time. 26,015 is what we have on the Bank Nifty now, 330 point higher and still surging. So a lot of these stocks doing well. Ajay, as we speak, Infosys has hit a fresh 52-week high. Your pecking order for IT stocks?
Yeah, in IT, I think TCS is our preferred pick in the large cap space, followed by Infosys. And Wipro and HCL Tech clearly are not favored with a short to medium term perspective because of a very weak demand outlook that the companies have given. In case of mid-cap space, I think one has seen a very sharp surge in almost all the mid-cap names. So it will be very bold of anyone now to jump in at the current valuations when they are trading at a significant premium to the large cap names. But obviously the demand environment is quite strong for them. Most of them have given a 10 to 13% growth in the estimated growth in earnings. That's the outlook that they have given. But I think the prices have moved up very sharply and the valuations now are quite rich in case of mid-cap IT names.
Okay, Ajay.
IT names.
Okay, Ajay, I wanted to ask you, just to complete the banking, non-banking argument, no sympathies at all for an SBI, ICICI Axis?
I think, in my opinion, one has had too many false starts in case of PSU banks and also corporate-focused private banks. I would much rather be cautious and wait for a couple of more quarters and see how things pan out before jumping into the fray. Because we've been there multiple times over the last 2 years, and every time people have lost money.
Okay, just hold on. We have the Gales management addressing the numbers, so addressing the press on the numbers. So we'll just listen into that and come back to you.
On this annual press conference, as you know, every time during the annual results, we look forward for this opportunity to meet all of you and share our performance and also to take the questions within the organization and the sector at large. So I'm once again very happy, and on behalf of myself, my colleagues here, a warm welcome to each one of you once again.
Index went to 10,520, that's the Nifty. Sensex is also up even better, actually 1% higher, 333 up on the Sensex, and the Bank Nifty of course stands tallest, 1.4% higher, 351. That brings it to 26,038. In a minute, we will get the technical experts to tell us whether some technical lines have been crossed for them to go long now, or is this an even better shorting opportunity. But before that, we still have Ajay Bodke with us. Ajay, you think this market has too much of downsides, or do you think it's getting rather solidly protected at 10,400?
I think 10,400, if you take a medium-term view, is a good level to enter. Because most of the concerns at the current level of oil prices, in my opinion, have got factored in. Now one will obviously have to wait in case there's a further sharp flare-up in oil prices, then obviously there is a further downside. Otherwise, I think more or less we've had a good correction from 10,900 levels, and the corporate earnings take off, although being slow. I think a clear indicator is that we have the earnings have bottomed out. And I expect as we proceed into the second half of the year, if the monsoons are normal, one can see a sharp sort of the consumption-led growth will continue to post very good picture. Especially the FMCG names, the volume growth numbers, especially in rural areas, have been double digits in many cases. Pricing power is not yet back, but I think in second half with a good monsoon, hopefully even that should come back. So one should not be excessively negative in the market. FMCG, retail names, auto ancillaries, and retail-focused names in banking and financial services, one should keep the faith.
Okay, the market's keeping the faith now. Look at the move on the Nifty
all
now.
indices actually, yeah.
10,520 now on the Nifty. Tell you something, the advanced decline is still in favor of declines, but that's because intraday there was quite a bit of selling. So even the recovery is taking time, but 370 point higher is what we have now on the bank Nifty. That really has been the big talking point. Of course, weekly options expiry also helping. Let's go across to Nimesh then for dealing room check. Nimesh, phenomenal intraday recovery. What led to that? What's been the feedback?
Hi, Ruth. So, for a surprise, today I'm getting a feedback that maybe both the FIs and DIs will see a large buy number. And that's an initial feedback that both the FIs and DIs have been looking to buy this dip at least in today's trade. Of course, today's institutional number will also have a large block deal of Avenue Supermart where the promoter sold and it was bought by both DIs and FIs. So we have to factor in that as well. But even excluding that, the sense I'm getting is maybe you'll see a buy figure from both FIs and DIs. Essentially, the DIs are looking to buy into the defensive names. So the entire IT pack seems to be the new flavor now. So the large cap IT is getting bought into. I think that the intraday fall, what we saw today was essentially because of pressure on the OMCs. Now that's where the big concern is. Whether there will be more additional taxes is something which has been talked about. So that entire space is under pressure. But broadly, I'm getting a sense that maybe at these levels there is some bit of cherry picking happening by both the FIs and DIs in the large cap names. And also this shift from mid cap to small cap is helping some of the large cap names as well. So that's the initial feedback, but I guess watch it for the FI numbers very closely. But the initial feedback was today there was some bit of genuine buying both from FIs and DIs in the cash market.
Okay, आपके मुंह में घी शक्कर, or should I say आपके मुंह में cherries and berries. Well, actually, Ajay, we will have to thank you on that note because now the GAIL management is talking meaty stuff about their numbers. So let's cut across just once again to Mr. B.C. Tripathi, Chairman and Managing Director of GAIL.
Apart from that, we also are very conscious about the domestic gas supply. We have already contracted 3.5 million standard cubic meter gas, which will be supplied through CBM and other producers here in India. And this year we'll be getting additional domestic supply of almost 2 million standard cubic meter of gas.
Okay, that's GAIL, the stock down 5.5% right now, by the way, not looking good at all. We have Sampath Reddy now joining us of Bajaj Allianz Life Insurance. Sampath, good afternoon. A large part of this mid-cap fall has been put on mutual funds, right? And that inter-scheme sort of changes. Would you agree, or you think that's been a bit of an excuse?
I think it's largely the valuation which were there, which the mid caps were trading. I think that was a primary reason for this correction. I think it's not really the change in the scheme patterns or per se. I don't think so. That's a key major reason. I mean, even today also the mid cap companies still trading at a significant premium to even the larger cap companies. Somewhere around 22, 24 times is the mid cap sector average PE multiple has been vis-a-vis large cap Nifty multiple is in the much relatively below is around 17, 18 times. Even today also, even after the correction, still the mid cap companies are trading at much premium valuation to the larger cap. I think this valuation gap which is there which is what is actually leading to this correction, not really the changing the scheme patterns. We still think that in spite of the reasonably large correction in the mid cap, we still think that the large caps are a better place to be in.
I guess, Sampath, you're one of those guys who's putting in money for 10 years and 15 years at a time. But if you were putting money for a year or two, is debt getting a little, for 1 year, not two, for 1 year, is debt more attractive than equity?
I think for the current interest rate where they are today, I think from a 1 year perspective, it is possible that the fixed income may give a better return than that of equities. Yes, it is possible from a 1 year perspective, but again from a 3 to 5 year perspective, I think we still like the equities even at the current valuation. We still liking the equities at the from a longer term perspective.
And now what in equities? Let's start with consumption since the best numbers came from there. Will that be the top of your pecking order?
Yes, that has been one of the sectors which we've been liking. But in addition to that, we've been liking the sectors which are exposed towards mainly the export or other currency exposed sectors. If you look at the rupee has been depreciating after a long time. Last couple of months itself there was a 5% depreciation. Whole of last year, rupee was very strong. I think because of that, you've not seen much of earnings growth in export-oriented companies. That could be IT services, that could be even the metals also come under the similar category, like especially the steel and aluminum. And also the pharma, which is still export-oriented, but we have not yet come to the very attractive zone. But I think the other sectors, whether it could be auto ancillaries or any other export-oriented companies which are directly linked to the currency play, I think that is something we've been liking in the last few months.
Okay, are you buying anything in this whole oil and gas space and the kind of mess that we have right now in upstream, downstream, anything?
I think the oil and gas is still we're significantly underweight. We hardly have any exposure there. OMCs have their own problem because with the crude going up, whether the government will be able to allow them to pass on the price increases. That's a key worry there. And even in the upstream also now with the today onward, today there is a fresh concern come up there, whether upstream companies will also have to bear some amount of subsidy if the oil price were to continue to go up. I think this is really a cause of worry in the oil sector. So because of this, we're staying away from the oil and gas sector as of now. And if you still probably interested, maybe petrochemicals or the pure refining companies could be still a better play than the either OMCs or upstream companies.
Okay. Well, at the moment, it is a 1% gain for the Sensex and the Nifty, and almost a 1.5% gain for the Nifty Bank. Okay, Sampath, let me put it more broadly. If I were to give you 100 rupees, what would your pecking order be sectorally?
We've been liking these few sectors. One of them is financial. Within that, the retail financials, whether it is NBFCs or it could be the retail, the banks. This is something where the growth continues to be very good. Upwards of 20-25% earnings growth. They've been delivering. Even in the low credit growth environment today. And also, with the PSU banks, where most of the banks suffering because of the lack of capital or because of the PCA measures, that is, I think, most of the growth is picked up by these private sector banks. I think that's that segment we continue to like. Even the valuations also, in this private sector retail banks, the valuations are also not really a concern there. So this segment we've been liking and we continue to like that. As I mentioned, export oriented, which is now basically the IT services companies, that also we've been liking. Whole of last year earnings growth was hardly anything in the IT services companies. That is in spite of the dollar revenue growth being around 8-10%. Largely that is because of the currency appreciation in the last year. I think that concern is now behind. The valuations are also attractive there in the IT services. So that is also we've been liking. And in addition to that, consumer sector, the FMCG sector, that showing a very good growth, even though valuations are on the higher side, because of the growth, because of the the longevity of the business and products there. I think we even at the higher valuations, we've been liking that sector. That's clearly an overweight for us. Apart from this, the infrastructure is I don't think is a big there's much money to be made. It's purely consumption driven sectors, whether it's a retail credit or export oriented companies,
sure.
Or these are the things we've been liking.
All right, Sampath, we appreciate your time today. Thanks a lot for joining us. Just about 45 seconds left for markets to close. Let's just do a quick recap. Today has been a day of powerful short covering. And in fact, 100-point rally on the Nifty is where we are closing. 350-point rally on the Bank Nifty on the weekly options expiry day. And of course, the mid-cap index ends in the red. But today's really been about large caps. TCS, Infosys, HCL Tech Mahindra. So IT sector really led that big move. Bharti Airtel was in fact the top Nifty gainer, up 4.5%. Axis was up about 2.7%. Sun Pharma ahead of numbers was up about 2.5%. Forgot to talk about ICICI Bank, that's up about 2%. HDFC was up about 1%. On the way down, Tata Motors, fresh 52-week low for that one, 6.5% gone. GAIL was down 5.5%. ONGC, though it recovered, but still down about 4%. And Ultratech Cement made a fresh 52-week low today. Lata.
Oh, absolutely. And while honors didn't go to the mid-cap space, you will have to admit that stocks pulled up somewhat from the day's low. At one point in time, that index was down 1%, and we were trailing probably 3 stocks in the red for 1 in the green. You're ending in handshaking distance. In fact, I think the decliners are a tad lower than, the decliners are at the end of the day, with the averaging are marginally higher than the number of advancing stocks. So it's almost finished like a photo finish. That's courtesy to a large extent to the finance stocks as well. A large number of them doing well. It's of course the biggies who did well, but you have to count in the RECs and the PFCs also as finance stocks. Those have moved up about 5% apiece. Results of PFC due. Among other stocks, the evergreen Jubilant Food is still dishing out about 3.77% in terms of gains. Following it, other food stocks like Parag Milk as well doing about 3% in gains. Then you have the mid-cap IT, along with the big-cap IT, the Hexawares and such like. The KPIT, with good reason, are some of the stocks that have done extremely well. I'm coming back to beverages and eats. It's tea time, you know. Arun Beverages also doing extremely well. So there are, it's a bunch of stocks that have done exceptionally well, even in the mid-cap space. But we have to tell you the ones that didn't. And they were, of course, the Jet Airways variety, where there was a big ram down on that stock because the numbers seriously disappointed. And then the traditional ones, many of the cement stocks have also disappointed. Bharat Forge, while I mention Jet Airways, Bharat Forge with good numbers is still seeing profit taking. Motherson still with good numbers. Both of them are down about 6% each. Bharat Forge and Motherson Sumi, despite performance being reasonably good. GAIL, ONGC, those are the other stocks, of course, big ones, which also have come under the hammer for both GAIL for its results and ONGC because of the unhappiness surrounding the fact that without a windfall, the tax may come.
Oh, yes. So ending at 83 point higher because of adjustment, and Bank Nifty ending 331 point higher because of adjustment. Prakash, I was, of course, on CNBC Awaaz earlier in the day, and, I think it was 10:30 in the morning, and you made a point that for today the market has bottomed out and you want to now participate on the long side. So that call has worked out, but you think it was only a short covering move, or you guess that we could have made a bit of a bottom for the near term as well?
Looks like so far, when I'm looking at the internal structure, that it is a near-term bottom, because the move that we have seen is one up move, a down move, and a higher up move. Looks good to me. As long as 10,480 holds, I think we have made a new bottom out here. But if yesterday's low goes, then we'll go for a fresh run. Until then, up move starts, maybe for 200 points more.
Oh, 200. Mitesh, what is your interpretation? You were also closely watching 10,520, 530. We did touch 520. It's only averaging that has brought it down to 513. What's the tomorrow trade?
Yeah, so tomorrow I think, I'll keep a close watch on the Bank Nifty. That's the index which kind of pulled up the Nifty. And if it stays about 25,950, then I think we'll have a stronger or a more, better pullback. I think we might head towards levels of roughly around 10,620, 630 on the upside. So there could be another 100 points upside happening. We've kind of reduced our short exposure on the indices towards the end. We had shorted at about 10,510 odd levels, so lost about 20-25 points. But I think with the Bank Nifty reversal happening on the hourly and the half-hourly charts, I think there could be about 100 points more upside happening on the Nifty. But around 10,620, again, I think, if we show some weakness or failure to get past those levels, we would be aggressively short.
Okay, so you go long now, but be prepared to short at 620,
I think right now, Lata, I would advocate buying Bank Nifty with a 100-point stop, maybe for a 300-point kind of rally. And then around, when that effect plays on the Nifty, I think then I'll short the index. Okay, all right. Wait for the high only to short it. Mitesh and Prakash, thank you very much for joining us. The day is definitely belonged to the short covering guys, as well as, you will have to admit, perhaps a bit of the long guys as well. Forgot to mention granules in the list of
tall losers. That one's down almost 10% after numbers that seriously disappointed.
Well, let's get on to a market opinion, and this one is from emerging market specialist Brian Edechers of Aviva Investors. Now, in conversation with Udyan Mukherjee as part of London Eye Series, she says that the growth dynamics seen in India and China, coupled with the strong economic fundamentals, look good for emerging markets.
I think the long-term fundamental argument for emerging markets is most definitely intact. We are in a period of volatility, extreme volatility. The US dollar is strengthening on growth that is coming through, but coming through in line with expectations. You saw the US Treasury yield spike through 3% on retail sales numbers, which were in line with expectation. This obviously is a headwind to emerging markets. India, China, the two biggest emerging markets, have a combined population of 3.7 million people, most of which are young income earners. You've got this emerging middle class that is coming through. They're growing richer. They want to spend. Those growth dynamics, coupled with the stronger economic fundamentals, look good for emerging markets. I think financials are an opportunity within India, but they're also a risk. I mean, we know that the public banks are in a mess. The government is working to rectify that, recapitalise. The bankruptcy law comes through. One would hope that that enables the financial sector as a whole to move forward. But it's a two-speed market. What we need to watch is the cost of funding. Liquidity is tightening in India, and the cost of funding is growing. So you have to be very careful looking at banks' balance sheets, how they're funded, what proportion is wholesale funding, what proportion is deposit funding, therefore more stable, typically cheaper, and therefore the cyclicality and volatility that you may see in returns for the various banks.
Okay, so that's the word coming in on the emerging markets. But let's move on and talk about some stock-specific action then. Tata Motors was down about 6% in trade. The big loser, trading close to its 52-week low is what the Tata Motors stock closed at. And that after the earnings in Q4 really disappointed. Now, JLR margins fell 220 basis points, and the losses as well continue in the standalone business. Sonia Shenoy actually caught up with PB Balaji, the CFO of Tata Motors, and began by asking him about their plan for volume growth going forward. Listen in.
As far as JLR is concerned, the UK remains a challenging market. We have called that out explicitly. At the same time, we shouldn't forget the China market continues to do very well for us, and rest of the world continues to do pretty well for us. Europe, from a situation of red, we have now moved it to an amber because we are starting to see growth coming through. And at the same time, US continues to remain challenging from the point of view of its traditional cyclicality that is there. As far as our growth plan remains, we specifically called it out in our investor deck, where we said that new models will continue to come through well. Keep in mind that we launched 5 models last year, and all of them are going to get their full year impact this year. I-Pace gets launched in July. So the product pipeline is coming through very strong, and we are very excited with the product pipeline. That for me is a starting point of growth. And of course, we need to be clear, given our market shares, there is definitely opportunities of growth to remain there. Hence, we have explicitly called out that we expect, as far as FY19 is concerned, both growth and profitability to be better than FY18.
So when you say better, give me some sort of hint. Will it be in high single digits? Will it even get to double digits in terms of volume growth?
I think we don't look at the individual number per se. The fact that we are growing is the key point, and we have to be better than last year. And of course, we know what our capability has. If you go back in history, kind of capability, what is the possibility that we can deliver. So I think we are quite confident with the product pipeline that we have, and therefore we look forward to a pretty exciting 19.
All right, you have given an explicit guidance for the EBIT margins. You've said about 4 to 7% for FY19 to 21. I want to understand that given that the volume upside is capped because of challenging conditions, is there any major cost-cutting cost-cutting program that the company plans to do in order to achieve these margins?
See, more than a guidance, I'll call this a plan that we're internally planning for. And the reason we have did that is that people who are keen to understand, as we put out an 8 to 10% guidance before, how are we intending to reach the 8 to 10% broad range that we had indicated? Yeah. If you adjust for the capitalization policy changes that you've done, 8 to 10% becomes 7 to 9%. That's a 100 bips correction that is there. And therefore, we said over the next 3 years, we gradually will improve from where we are today, which we are not comfortable with what was there last year. to a 4 to 7% range and step it up in that direction and then take it off from there.
If you look at the EBITDA margins for JLR, they've come off substantially to 10% by the end of FY18. Back in the day, about 4-5 years back, you were doing almost 17-18%. So is it safe to assume that because of all these cost-cutting initiatives, etc., you will get back to the high teens?
That's the only way we'll deliver 4 to 7% EBIT. Therefore, EBITDA has to improve by the same 300 odd bips that you're talking about in this period, back to where it is supposed to belong.
Tuticorin continues to remain tense. The latest casualty has taken the death toll to a total of 13. And now the Tuticorin fire sparks ugly politics in the state. DMK President M.K. Stalin is detained, while Tamil Nadu Chief Minister accuses the opposition of fueling the fire. Jude Sennett joins in on the phone line from Tuticorin to get us the latest from this development. Jude, over to you.
Yeah, so as you rightly said, it's been simmering from the morning. The fact is, we haven't seen the kind of violence that the district witnessed in the last couple of days. However, like you mentioned, one individual has succumbed to his injuries that were sustained yesterday, which takes the total death toll up to 13. But a problematic issue is the number of preventive arrests that have been made by the police in the last couple of days. Several protesters, parents, relatives have been alleging that a number of their sons and relatives have gone missing by way of these arrests and illegal detentions. So while the town is, of course, simmering from the last couple of days' violence, an uneasy calm continues to remain over Tuticorin. Back to you.
Okay, Jude, thank you so much for getting us that report. But it is time now.
Commodities now, where we have seen a lot of choppy moves come in all sectors, on whether it has been crude oil prices, where we have seen some profit taking continue for a second time zone right now, or whether it's gold and silver, which actually have finally seen some buying come in. But it really is about the metal space, which has been all over the place. You have to take a look at the steel prices, which have continued to decline, trading at a 4-week lows right now. The iron ore prices have been slipping as well, 5-week lows onto that one too. It really has been about the steel production in China. From May 1st to May 10th has been an all-time high production coming in from China. But then, of course, there are some concerns about being taken some disciplinary actions in sense of environment. And that is something that the markets, of course, would keep an eye on. Joining us also on the show now is Hong Mai Lee to discuss more about on what really can be expected from this sector. Hong Mai, hi, good to have you. How have you been reading on the steel movement really? Because there has been quite a bit of a pressure. Today perhaps was a better day, but what kind of a trajectory are you working with?
For the time being, actually looking at the steel industry, just as you mentioned, recently we see another slip for the past a couple of weeks, I believe, which has very much to do with environmental protection patrol and investigation again in China, in many provinces as well. Starting mid-May, actually, China dispatched a number of delegations and team members from the ministries just to checking on the provinces, which is adding pressure. And also, China is going into the rain season. So normally for rain season, it will be affecting the steel demand in East and South China. All those together actually play a pressure, impose a pressure on the steel prices as well, on the iron ore prices as well.
So what is your sense from here on? What kind of demand and what kind of price movement can we expect in case of steel and iron ore prices?
I would say that for the time being, if you look at the iron ore prices nowadays, we're looking at 60, 70 numbers, and then which will be a very comfortable number for the rest of the year, both for the miners as well as for the steel mills as well. But of course, this is on the condition that China's steel demand will remain steady, which I believe that will be probably the case, because so far we see that fixed asset investment slowed down a little bit in April, but most probably it will be remain at a healthy level for the rest of the year. And so fixed asset investment will be affecting the property market, will be affecting the infrastructure construction. If that is steady, that will be the two major contributors to the steel demand. And that means that China's steel demand will be stable.
Okay. So Hong Mai, if I just have to get a number out of you, what is the percentage gain or a decline can we expect in case of steel prices from here? Because the last couple of years were very, very strong for steel demand and steel prices. Anything, a follow-up of that, a repeat performance can we expect for this year?
I wouldn't say large. I would say Okay, put a percentage will be a bit risky, but let's say I give you a specific number. Let's say for billet price, nowadays we're looking at 3,600. I think it will be another, moving up, moving down. Most probably the bottom will be around 300 RMB, which will be around 3,200, 3,300. That would still be a very comfortable level.
Okay.
And so, yeah, to China's understanding, I would say that anything around that will be sustainable to some extent. I just finished attending this industrial event in Singapore. From the market understanding, they were saying that most of the time, the steel prices will be hovering at a high level. So high level, now we are at a high level, which means that all this kind of a level will be sustainable for the rest of the year.
Point taken, Ongma. I will let you go at that. Thank you so much for joining us, where it is expected to be stronger ferrous metal prices going forward, at least. But what can you expect from the non-ferrous space? For that, let's get in Fayaz Adani of Kotak Commodities, who joins us in our studios here. Fayaz, hi. What is your sense on the other metal space? Nickel, of course, has seen some strength come in, but the other metals like copper, aluminum are really dealing with their own individual fundamentals.
Oh, yes, I think as far as copper is concerned, I think it is struggling to sustain at higher levels, and it is trading in a very narrow range. The markets are expected to be surplus in the current season, current year, and therefore we feel that it will continue to be on the bearish side. The price structures are trading at a very high contango or with a high carry, indicating that the supplies would be higher in the coming time. That makes us to be bearish on the commodity. And to talk about the Indian markets, we recommend to go short on the June MCX futures at around 469 for an immediate target of 463. The stop loss for this strategy would be around 472.
Also comment on gold and silver, because today is the kind of day when you have seen a bit of a green on the screen. Does it encourage you to go out and buy?
Well, we have been bullish on gold for quite a period now, quite a number of weeks now. And from a longer term perspective, we are still bullish on gold. But from a near term perspective, we expect a correction. Looking at the technicals, we feel that the markets are a little overdone. And to talk about rupee also, we feel that there would be probably some intervention or some correction in the Indian rupee, which should actually lead to some decline in gold prices. So from a trading strategy perspective, we recommend to go short on gold futures at around 31,380 for a target of around 31,150 with a stop loss of around 31,480.
And Fayaz, we seem ready to break below that $79 per barrel mark when it comes to the crude oil prices. Are you looking at furthermore correction before the New York session opens today?
Yes, we feel that the markets are overdone in a near-term perspective. We don't know whether it is a reversal right now, but for sure there is a correction on cards, and that makes us bearish on the crude oil prices. If I talk about NYMEX, I think $70 is quite achievable, and from the domestic market perspective, we recommend to go short at around roughly around 4,930 for a target of around 4,850 with a stop loss of around 4,968.